Huh?
Please unmute yourself.
No, I did not
Yes,
mute.
yes, we are able to hear you, sir. Please continue.
Okay, now can you hear me?
Yeah.
Yes, sir.
Okay. My distinguished guests, esteemed shareholders, and fellow members of the board, a very good evening to all of you. It is a privilege and honor to welcome you all to the 36th Annual General Meeting of POCL Enterprises Limited. I am deeply grateful for the unwavering trust and support you have shown towards our company. Your continued belief in our company is a testament to our collective efforts. It's indeed an honor to address you all today, and I hope that together we will be able to scale greater milestones. Like the previous years, this year AGM 2 is being hosted on a digital platform. As we gather again virtually to discuss the progress made in the bygone year, it is a pleasure to address you on behalf of the Board of Directors of POEL. I extend our sincere gratitude for your participation today. At the onset, I would like to sincerely express my deepest gratitude to Mrs. Indra Somani, who retired as independent director from the board on September 11, 2024. Having served 2 consecutive 5-year terms as an independent director, Mrs. Indra Somani's invaluable contributions, experience, and guidance have been instrumental in driving the company's success. We extend our deepest thanks to Mrs. Indra Somani for her contributions all these years. I am pleased to share that our company has experienced substantial growth in comparison to the previous years and has achieved a significant milestone, setting new benchmarks for financial success. Year on year, we are experiencing significant growth in the company's annual performance with historic highs in terms of revenue, net profits, and cash flow generation. Let me now briefly touch upon the overall economic environment before I share my thoughts on our company's performance in the year 2023-24. The global economy has weathered significant storms in the recent years, beginning with the supply chain disruptions and geopolitical tensions to soaring inflation and monetary policy tightening. The ongoing conflicts in Europe and the Middle East, coupled with the Red Sea crisis, have further worsened these pressures. Despite these headwinds, the global economy has demonstrated resilience. While growth slowed in 2023, the economy managed to avoid a recession. Despite concerns about banking crisis and difficulties in emerging markets, growth was stronger than expected in the second half of 2023, especially in the US and several developing economies. According to the International Monetary Fund, IMF, inflation is still rising, making it harder to bring down prices overall. However, amidst these headwinds, IMF projects a steady global economic growth of 3.2% for 2024 and 3.3% for 2025. As we navigate a complex global economic landscape, the Indian economy stands out as a bright spot, showcasing remarkable resilience and growth. According to the IMF estimate, the Indian economy is expected to grow by 7% in 2024. This robust growth is fueled by the ongoing reforms across various sectors, such as healthcare, energy, and MSMEs, which in turn are laying the groundwork for the more vibrant economy. The substantial investments from both public and private sectors, coupled with a strong domestic consumption, are driving the continued progress of our company. India's resilience for the face of to face the global challenges is a testament to the strength of our economy and our unwavering commitment to reform. As we look ahead, I am confident that our company will continue to thrive and contribute positively to the global growth. Let me now delve into your company's performance for year 2023-24. We are all here celebrating another successful year in the history of POEL, marked by noteworthy accomplishments even amidst global challenges. Friends, I'm delighted to share with you all that we have achieved, a remarkable 28% increase in turnover for the year 2023-24. We have successfully scaled to turnover of rupees 1,120 crores, surpassing the previous year's figure of rupees 874 crores. This significant increase in turnover reflects the year-on-year hard work and the growth of POEL. Our earnings before interest, depreciation and tax for the year stood at 39.21 crores as against rupees 29.17 crores, showing an increase of 34.42% when compared to the previous financial year. For the year 23-24, our company's profitability marked a significant growth, with profit after tax reaching a new high of rupees 17.74 crores in comparison to the profits of rupees 12.89 crores, showing an increase of 37.63% when compared to the previous financial year. POEL's market capitalization today stands at about rupees 430 crores as compared to rupees 68 crores at the beginning of the previous year. The share price of the company at the beginning for the year 23-24 was rupees 121. The profitability and growth forecast stood well appreciated by the market, taking the PL shares to record high of rupees 839 per share, which is almost a 7x return to our shareholders. In order to provide enhanced liquidity in the capital market through widening shareholders base and to make it more affordable for small investors, the board of your company has recommended the subdivision of the existing equity shares of the company such that each equity share having face value of rupees 10 will be subdivided into 5 equity shares having a face value of rupees 2, subject to the approval of the shareholders at today's meeting. Now let me brief you regarding the growth of our operating segments. At POEL, we have 3 segments: metal, metallic oxides, and plastic additives. As always, our metal segment once again delivered exceptional results for year 23-24. We have recorded a total revenue of rupees 764 crores as compared to rupees 602 crores in the previous year, Our metal segment has demonstrated impressive growth, expanding by 27%. The ongoing CapEx project is poised to further accelerate this momentum, ensuring sustaining and significant gains. The metallic oxide segment achieved a notable revenue growth, increasing from rupees 355 crore to rupees 374 crore from the past year. Our plastic additives segments also saw a positive trend, with revenue rising from rupees 72 crores to rupees 80 crores. By introducing innovative and value-added products within this segment, we have successfully improved our profit margin to 7%. During year 23-24, we strategically allocated rupees 2.8 crore towards capital expenditure, with a primary focus on enhancing operational efficiency and safety. By investing in automation technology, we successfully reduced waste, improved productivity, and created a safer working environment for our employees. Additionally, significant resources were directed towards modernizing our laboratories and upgrading testing equipment, ensuring an uncompromised quality at the forefront of industry standards. During the year 2023-24, your company has awarded brand listing from the Multi-Commodity Exchange, known as MCX, for its pure lead produced at alloying and refining division. We produce lead ingots with 99.98% purity, which are now approved and acceptable for delivery at all MCX warehouses. This MCX brand listing is a true recognition of POEL, showcasing our unwavering commitment to quality and customer satisfaction. Dear members, with great pleasure I would like to announce that POEL has honored with the prestigious Star Performer in non-ferrous metals by FEPC India in recognition of outstanding export performance for the year 2019-2020 under medium enterprise category and for the year 2022-21 under small enterprise category. These awards serve as a powerful endorsement of our company's export excellence. Our POEL is growing day by day, and these achievements are just the beginning. And we are more than confident that the growth momentum will continue in the coming years. At POEL, the interests of our shareholders are always at priority. Based on the company's performance, your directors pleased to recommend a final dividend at 25%, that is rupees 250 per equity share of rupees 10, each for the year ended March 31st, 24, out of the current year's profits. Dear shareholders, we assure you all that we will continue to work towards delivering exceptional returns and demonstrating our commitment to sharing the company's success with our valued shareholders. POEL's commitment to corporate social responsibility is our prime goal, and it remains a goal. It is steadfast. We believe that business have a responsibility to contribute positively to the communities in which we operate. In the past year, we have focused on supporting and enhancing the lives of marginalized sections of the society in the areas such as education, medical, and healthcare, eradicating hunger and poverty. During years 2023-24, the company has spent an amount of rupees 9.44 lakhs towards the CSR obligation. In line with our motto, we will always continue to explore new opportunities to give back and create a more sustainable and equitable future for all. Building on a strong financial performance for the year 23-24, POEL is poised for accelerated growth. Our strategic focus on enhancing profitability across all segments is yielding positive results. In the first quarter for the year 2024-25, we have achieved total sales of rupees 360 crores, showing an increase of 18% quarter over quarter, and our profit before tax stood at rupees 8.37 crores, marking a promising start to the fiscal year. Further, I'm excited to unveil our strategic plans for the company's future. In line with our unwavering commitment to operational excellence, we are pleased to share about our initiative towards sustainable manufacturing process undertaken at Metallic Oxides Division and Plastic Additive Division. This project entails a transition from light diesel oil and furnace oil to LPG in our manufacturing processes, which is a significant step towards integrating green energy into our operations. We have successfully implemented this change at our Metallic Oxide Division and are nearing completion in the others. The overall investment outlay for this project is rupees 1.5 crores. This shift will not only result in fewer emissions, but also enhance efficiency, leading to lower production costs and improved profitability, and most importantly, reducing our carbon footprint and contributing to a more sustainable environment. Additionally, we are also actively expanding our lead alloying and refining business at our Marmalai Nagar facility. As already informed, the expansion is undertaken at an estimated investment outlay of rupees 5.22 crores. This substantial investment will increase our refining and smelting capacity, enabling us to capture new market opportunities and expand our existing customer base. It will also result in estimated additional revenue generation of about rupees 200 crores per annum and an increase of 2% in the margin as a result of higher production, efficiency, and economics of scale. POEL is focused on driving growth in our Metallic Oxide Division through strategic expansion of zinc oxide sales, both domestically and internationally, by targeting emerging markets and optimizing our operations. We aim to significantly increase our revenues and strengthen our position as a leading supplier of high-quality zinc oxide products. POEL is poised for substantial growth in its PVC stabilizer division, targeting a doubling of operations in the coming years. Our strategy centers on introducing innovative, high-value products that cater to the evolving needs of diverse end-use consumers. Recognizing the growing demand for calcium zinc stabilizers, we are actively expanding our market reach into emerging economics and exploring regions with significant potential. These initiatives underscore our unwavering commitment to growth and sustainability. These strategic moves are designed to enhance shareholders' value, bolster our competitive edge, and position us for long-term success. We are confident that these actions will propel our company forward with distinct recognition in the industry. An organization is only as strong as its people. And so, before I conclude, I would like to express my sincere gratitude to our board members, leadership team, employees, shareholders, investors, suppliers, and customers for their unwavering support and dedication all these years. On behalf of the board, I wish to place on record our gratitude to our banks, HDFC Bank, Canara Bank, ICICI Bank, and Kotak Mahindra Bank for their all-time encouragement, support, and invaluable contribution in facilitating our operations smoothly. With all your continued trust and cooperation, we are confident in our ability to achieve even greater miles. We are grateful for your continued support and we look forward to what the future holds. Thank you. Jai Hind.
As the notice is already...
Thank you, Urvija, for attending the meeting. You have attended the previous AGM also and seeking for clarification at this AGM also. Thank you very much. With respect to the first question on the investor presentation, Mr. Slok has also sought for the same thing. Yes, this is something which we have been thinking now. The company has done substantial growth in the last 2 years, and it is the time for the company to come out with investor presentations and quarterly con calls. So that has been on our discussion table for some time now, and soon we will have this conducted. So of course you will now going forward, maybe in this meeting or in coming board meetings, you will see the investor presentations and quarterly con calls to happen. Then with respect to the second query was with respect to the capacity. So in terms of capacity addition, Urvija, we are doing the capacity addition right now in only one of the unit, that is in our metal business, lead metal business, where we are adding a smelting capacity of almost 10,000 metric tons and a refining capacity of almost 10,000 metric tons. So other than that, there is no capacity additions in any of the units, but a lot of capex plans are on tables right now and will be informed at appropriate times when these capex plans are materialized by the management. Of course, in terms of the funding options of these capex plans, we have to look at it, what is the exact quantum that is required for the capex. For example, if you see our metal division expansion, where we have increased our smelting and refining capacities, the total project cost came around to 5.5 crores, and together with the indirect taxes added on to it, the total fund flow requirement came to about 7 crores. So of course, at that point of time, you have to resort to bank borrowings, because the internal accrual should not be taken to long-term borrowings. Otherwise, sufficient funding or sufficient margin will not be available in the business to run the show. So we have to look at the capex plans each individually and whether that requires a bank borrowing or not. And if so, we definitely do resort to bank borrowings. These are available at 9 to 10% interest rates. Of course, at the time when we borrow, we definitely have a look at the overall debt equity composition of the company. right? And as the company has been doing well in the last 2 years, you can see we have done a phenomenal growth in FY23 and now in FY24 also. And we are definitely looking for another good year in FY25 also. So these debt to equity ratios are certainly to come down, bound to come down as we carry so much to our reserves. And question number 3 is on how to improve our margins. See, let me answer these questions in all our divisions. We have 3 major divisions. Let me first take about lead oxides, where we have done a lot of automation and upgradation of the technologies. And right now the margins that we are running at is about 3.5%. And we are doing necessary, we are taking necessary efforts and sufficient decisions are taken to scale up these margins to about 5%. And with respect to PVC stabilizers, you can already notice from the annual report that the current margins are about 6 to 7%, and these can definitely increase. We have appointed different business heads for each of the divisions now, and each business head is catering to the revenues of each units and each segments individually, and they are working on to improve the margins. We are also looking to add a lot of value added products. Is my video clear?
Not presently.
Something has happened. Can't connect to camera.
I think, Ashish, it's okay to continue without the video also, I believe.
Okay, but my voice is audible?
Yeah, very well.
Much.
Yeah, all right. Yeah. So in terms of PVC stabilizers, last year we have introduced a lot of innovative and value-added products that can cater to our customer requirements, the end users. And current year also we are focusing on introducing better products with, of course, at good competitive prices, and which can lead us to have better margins. So as far as the lead oxides and PVC stabilizers business, these are definitely where we are looking to improve our margins, and the management is taking all necessary steps to do so. Outlook for the current year, of course, as you can see from the results of Q1, the current year looks very positive, and we are definitely looking at a growth rate of about 30% in the current year. We have a vision to reach by next year a turnover of 2,000 to 2,500 crores, and different decisions are in process and in place to discuss to achieve these results, right? But of course you can see the margins in all this business are quite thinner, but it is all about the volume gains and the pricing decisions that we take, right? In terms of the main competitor, PVC stabilizers, we have a lot of competitors, but this industry is capable of taking more sales. We are able to we will be able to double our operations from here very easily without much worrying on the competition part. But of course you have to be competitive enough in the market, otherwise no industry, no company can sustain. So our quality team and our R&D team works on all these fronts to make innovative products in PVC stabilizer segment. With respect to the lead metals, you are already aware that there are much bigger players also available in the market who are the competitors, but sufficient gap is available for each company to increase their turnover base, the top line, year after year. The industry is growing, so although there is a tough competition, but there is not much impact that I feel there will be. Maybe Amber can highlight more on this later. Then there were no other questions from Ms. Urvija Shah. Let me now go on to the clarification that Shlok has sought for. With respect to the presentation, of course, sir, hide karne ke liye kuch bhi nahi hai. We will definitely have these presentations and the con call very soon. This was a point of discussions for quite some time now for us, and you can see that definitely we will come out on this. And with respect to the top line and the bottom lines for the quarter, you can see in any of these three segments, that is metallic oxides, PVC stabilizers or metal segments, what happens is each individual year is different. And just a second. I can. Each individual year is different. The gross margins, we are not into any pharmaceutical or any other assembly kind of company where the purchase price or the selling price are fixed. We do not sell our products at MRP. So the margins are bound to fluctuate up or either down. It is basis the cost cutting initiatives that we can improve our margins. But of course, you can see that in 1 year we have done better margins. 1 year, the margins might have come down. But in the current year, the sales that we have achieved is about 364 crores. And in terms of the gross profit ratio, we have 5.26%, whereas for the last year, we were at 5.04%. So at the gross level, we have improved. And at the operating margins levels, for the current quarter, that is Q1 of 24-25, our operating margins EBITDA was 3.6%, whereas in 23-24 it was 3.5%. So, but let me tell you, these margins are bound to fluctuate. It cannot so happen that year after year the margins will certainly improve. The product that I am selling today can be at one price and one profit percentage, and another deal I do with another company today can have different margins, right? So this will fluctuate, but definitely we are on the scale of increasing all these gross profit margins levels and net profit margin levels. And Mr. Shlok had another 9 questions separately that he has sent to us with respect to the sales volume of FY 23 and 24. So I have the details ready, Shlok, for you. So in terms of lead oxides, last year, that is FY 23, we did a sales of about 10,890 metric tons, and in 24 we have done 11,476 metric tons. In zinc oxide, we have done 5,500 metric tons in 23 and about 7,500 metric tons in 24. PVC stabilizers also we have improved, where in 23 our total sales volume was 4,400, which we increased to about 5,400 in FY24. Lead metal also we have done a phenomenal increase, where our sales was in terms of volume was about 22,000 metric tons. We have increased to about 25,500 metric tons, and you can see the capacity expansion is already in place, and soon we will have the requisite approvals from the regulatory authorities, and our lead metal volumes will scale up to about 35,000 metric ton in the coming year or maybe in a year or two. Then in terms of the total capacity and the capacity utilization, for lead oxides, we have a capacity of about 19,000 metric tons, and we are operating at about 60 to 65% of the capacities. But Shlok, we have to understand that there are some months where the capacities are full and there are some months where the capacities might not be full. So we are operating at 60 to 65% of the capacities. In terms of zinc oxide, we are operating at about 80% capacities. We have a total capacity of 6,000 metric tons. PVC stabilizers, we have 7,200 metric tons of capacity, and we are currently operating at about 75%. And lead metal, as you know, from last year to current year also, we have been at optimum scale. Our capacities were full, 90 to 95 to 100%, and that is why we have done an expansion and we have added another 10,000 to 10,800 metric tons of capacity. So this was your second question, answer to your second question. And what has been, please provide some commentary on the reason behind the growth in sales and compression in the percentage gross margins for the company. So, Shlok, in terms of the growth in sales, let me tell you very honestly, our sales have increased with our existing players only. We cater to a lot of OEMs and big players in the markets in tires and battery manufacturers. And our business with them has improved. As the order books positions have improved, the sales have also improved. But as I have told you, the margins have improved, but at the net profit level, you can see that the margins are not always fixed. We are not into an industry where the margins are fixed. A lot is dependent on the pricing of the metals. The lead metal and zinc metal is an international commodity where the pricing decision, of course, fluctuates a lot, right? And at the same time, you have to also understand that you cannot hedge 100% of your exposure. So the margins can sometimes come down, but what you have to look at is there a sufficient growth in the sales and the bottom line that we have in terms of absolute numbers also. What is the outlook for the coming year? We saw a substantial jump in Q1 of 25 without a commensurate increase in EBITDA or gross profit level. What is the reason for this? This is what I have answered now, Shlok. What kind of wage inflation are we expecting for the next few years? So, Shlok, out of our experience, 7 to 8% has been the wage inflation year after year. But where you have to hire the white collar workers, the increase that you have to give is quite significant because they bring so much on the table. But overall, on an overall basis, we see a wage inflation of 7 to 8% and maybe for white collars at about 9 to 10%. What is the capex plan of the next 2 years? How do we fund it? And so in terms of the capex plan, a lot is on the table for the management to discuss. We have already done one capex of about 5.5 crores and the total cash outflow was about 7 to 7.5 crores. We have a lot of the plans in place, but right now it won't be appropriate for me to exactly tell them. The Dr. Padam Bansal has already briefed him in his address to the shareholders that how are we looking at each of the segments. We are looking at doubling our sales, so definitely that cannot happen without capacity addition. We are looking to improve our sales in zinc oxide both domestically and internationally. Where if opportunity provides, we will expand. Otherwise, right now we have sufficient capacities. And in terms of the lead business also, we are on the looks that if there is an opportunity, we will definitely expand there as well. So on the overall front, we are expecting a capex of 10 to 12 to 15 crores. And how do we fund it? As I have already informed, we will have to look at each individual capex plan at that particular point in time. We will definitely resort to bank borrowings because of the interest rate of 9 to 10%, and so that sufficient margins that we can provide for our working capital business. In terms of the maintenance capex for any particular year, Shlok, the maintenance capex is about 1 to 1.5 crores in general for any year. Of course, this would be much lower where the plants are new. Your seventh question was why was there is an 160 bps jump in effective interest rate. So I believe that you have worked out 160 bps by arriving at the total interest cost for the year denominated by the total loan that we have borrowed. So as you can see, we have increased our funding. Our sales have gone up from 874 crores to 1120 crores, and for the current year also we have plans in place for at least 30% growth. So the interest have increased in the last year after the Fed has increased the interest rates. The RBI has also increased the relevant rates in India. So the interest rates in the overall banking system has gone from 7.5% to 9 to 10%. Right now we are borrowing at about 9 to 9.25%, and of course this jump was there in the previous year. One, because of the higher borrowing, and second, because the interest rate overall on the banking channel wise has increased. Then are we looking to add new geographies, products and clients in the foreseeable future? Definitely sure. This is something that no company would deny. In terms of the products that I can tell you that in PVC stabilizer, we are looking to add a lot of value added products for our customers. So PVC stabilizer is a segment where we have to work on different formulations. We have to cater to different customer requirements at very competitive prices. And that is why we have a big R&D and QC team for our this segment. So there we are looking to have a lot of product getting added to our portfolio. And if you see for a foreseeable future, definitely the calcium zinc stabilizers are bound to come, and there we are ready with our facilities. So there also we will definitely have a lot of products to get added to our portfolios. We have already done a lot of trials, and products have already been succeeded. Of course, because of the NGT orders and the government's initiative has not taken at a big scale, these products could not be so much commercialized as the lead-based stabilizers are. In terms of the clients and geographies, of course, we are looking to add a lot of clients, of course, OEMs and other players in the market. We will definitely expand our export sales also. Presently, we have about 200 crores of export sales. We are looking to scale export sales also. So we will definitely enter into new geographies, and we will definitely add a lot of other clients to our kitty. In terms of the growth and profitability trajectory, this is what I have told you, and Dr. Padam Bansal has also briefed in his address to the shareholders. The next speaker shareholder was Mr. Vaibhav. Thank you, Vaibhav. You are a SEBI registered investment advisor, and your clarification tells me that you have a deeper insight of the company's operation. Coming to your questions, you have total sought clarification on 9 queries. So let me club question number 1 and 2. What are the plans and the timelines to invest in battery breaking operations? Have we applied for license to import batteries? If yes, what are the expected timelines to get the license? So Vaibhav, in terms of the battery breaking operations, I'm sure you have asked this question in the last AGM also. And we thought of having the battery breaking operations to come into POEL folds in next 1 year, but these decisions have been slightly postponed because it is not about just the battery breaking operation. A simple battery breaking machine would be available at a cost of 2 crores and can run up to 20 crores also. But it is not just the battery breaking operations that will work for the lead recycling. You need to also put in place the smelting capacities and the refining capacities. You also have to look at the existing, last year Mr. Ambar Bansal has also informed you that the current facilities are not sufficient to cater to BBSU operations. So we will definitely have to look out for a new location where the MOEF-CC license, there are some constraints where the license are not given to the new units for initial period of 18 months. And lead being the red category industry, lands are not available at competitive prices at locations that we think of. You have to also think in terms of the logistics, in terms of the operational convenience. So this is something that has been on the discussion table of the management, but it is taking time to get materialized. Definitely this is something that we are looking, we will definitely do, and at necessary time we will apply for license from MOEF-CC also, and we will have this license. But you will have to see that there are a lot of decisions that are involved. We cannot have a BBSU system in place without smelting or refining capacity, or we cannot operate for the first 18 months after though having a BBSU in place, right? So we have to sort to a better strategy in terms of this battery breaking system. We will definitely let our stakeholders informed about this investment at appropriate time. And question number 3, have we added any major OEM clients during the year? No, Weber, we have not added any new major OEMs. And question number 4 was in terms of total capacity in smelting and refining. So we have a total capacity of about 21,600 metric tons in lead smelting and lead refining about 35,000 metric tons. There is one question with respect to trading of metals. I will let Amber to handle this question.
Yes, Mr. Weber, we've read your question about there has been a significant growth in the trading of metals from FY23, which further increases in FY24 in spite of margins being thin in trading. Can you please explain the rationale for increase in metal trading activities since FY23? I think you're right in pointing out that yes, our trading sales have all shareholders. I want to give a broad picture. So it is worth noting that we have recorded a trading sale of almost 224 crores in FY23-24 versus 108 crores in 2022-23. So that's almost over 100% increase over this year, which we as the management, we are very proud of it. It's quite a commendable achievement. So over this period of time, with the experience of the management, we've been able to develop trading as a separate line of business. And this is only possible, once we have the in-depth knowledge of the market conditions, the demand supply scenario, and obviously without the broad supply chain network that we today enjoy, So without all of this, this wouldn't be possible to actually take up as a separate line. Yes, obviously the observation is right, that the margins are a little lower in this segment. But I think what is important to note is that we have added this as a new stream of business itself for POEL. And this is continuously adding to the bottom line of the company and ultimately getting added to the reserves of the company. So not only this, but it also helps in managing our stocks quite efficiently. So considering all of this, we are very confident of this line of business, and we are confident that we are going to be adding on to these trading sales in the future as well. And obviously it will be our best efforts to increase the margins wherever possible. So yeah, I think in short, in conclusion, the margins are thinner, but what is important to note is it is adding to our bottom line and we are happy with that.
Thank you, Ambar. So let me now move on to the next question. Do we have any job work arrangements with any OEM customers? No, Weber, we do not have as of now any job work arrangements. Then next questions are on the sustainable margins of metal and metallic oxides division. So as I have already told you right now, in terms of metal business, we have about 2 to 2.5% margin where we can scale up to 5%. And in metallic oxides, right now the margins are 3 to 3.5 where we can scale up to 5 to 6% at least. So we are resorting to a lot of better strategic decisions and cost cutting initiatives. You can also notice that in our lead oxides segment, Dr. Padam Bansal has highlighted that we have transitioned ourselves into a greener energy where we are looking a significant cost cut down and a better efficiency and better production. There definitely the margins are bound to improve. Then the question number 8, can you please provide division of metallic oxide division between lead oxide and zinc oxide? I believe that you are asking in terms of revenue. So in metallic oxides, which comprises of lead oxide and zinc oxide, our sales in lead oxides are higher than sales in zinc oxide segment. In zinc oxide, we are doing a turnover about 130 to 150 crores, whereas in lead oxide segment, we are at about almost 200 crores. Then similar questions you have asked in terms of metal segment. Metal comprises of lead and zinc. So Vaibhav, right now, let me tell you that we are not into sales of zinc metal as such. So whatever the sales that are reflected on the P&L of the segment fully comprises of lead metal sales only, except for maybe a few 100 or 200 metric tons might have come from zinc metal trading business. I believe, Vaibhav, I have addressed to all your clarifications. Let me now move on to Mr. Gopal. So, Mr. Gopal, thank you for such a nice words that you have thanked the management and congratulated us. Then coming to your queries with respect to GSM, it is not GSM, sir. It is enhanced surveillance measures. ESM measures are taken by the stock exchanges. There we, as a company, do not honestly have any control. So the market parameters have been set that where a company which a market capitalization below a threshold has a significant movement in the share price is triggered by the ESM stages. These ESM stages are divided into multiples of 1 month or 3 months, and depending upon the share price movement, the stages changes automatically, right? As such, we do not have any control, or we cannot write any letter. Even if so we write, the stock exchange would not have any control to remove us. These factors are auto triggered and are auto set in the system, right? So these measures are taken by SEBI and the stock exchanges for the benefit of the investor community at large. And for the capex plan, I have already answered to this question. What is the capex plan that we are looking in the next 1 or 2 years? Then a lot of request has come for the physical AGM or a hybrid mode of AGM. Definitely we will look at this. But what happens in terms of a virtual AGM, a chance is given to the shareholder in terms of a faraway location shareholder is also able to attend the meeting. which is not available in case of physical because he has to travel to the place where the meeting is being convened. So we will have a look at this request. If so possible, we will take this request in the next year. Then the next speaker shareholder was Abhishek. Abhishek, thank you so much for the kind words and congratulated the management. Thank you so much. Your questions, let me now come to your questions. How many employees are there with the company? So as on 31st of March 2024, we had about 436 employees. This comprises of both white collars and blue collar workers, right? And we are expanding our teams in all business segments, be it shop floor, be it production administrative team, or be it head office. We have appointed different business heads to look after each segment, and of course to manage on to the daily tasks. The teams are expanding. So in terms of your other questions which you have sent us personally, we have hired a lot of new people on our roles to cater to different tasks and responsibility. We have not terminated any employees other than for the reasons of performance or any other reasons, and there has been no salary cut by the management. So and coming to the next question on other expenses reduction, so any business, Abhishek, will definitely look at cost cutting measures, and a major cost cutting measure that we have done is, you can see, we have transitioned ourselves from furnace oil or light speed diesel oil to LPG. So this is not only environmental friendly, but definitely will cut down a lot of cost. Now this is something that a milestone. Yes, sir.
I would like to interrupt here. I would like to tell to the shareholders that many of the expenses which you look through the lens of expenses, whereas those are investment for us, like we invest on our employee. So you take it as an expense, we take it as an investment, because good employee will deliver good results. So that's a good investment for the company. Same way, investing in technology, investing in better things, all those are look like expense in the trial balance, but really it is an investment. So please change your outlook, thinking, and treat most of the expenses which you look at as expenses, those are our investment. Let me very clearly tell you, and company will continue to harp upon our employees. Those are our assets. Thank you.
Thank you, sir. So, Abhishek, see, in terms of the expenses, definitely a lot of cost-cutting initiatives are taken at the plant level, plant head level, and at the management level. One of the example was the transition to LPG, which is a milestone, and that is what we wanted to bring to our announcement of the shareholders. Other cost-cutting initiatives are always there, and wherever possible, we are definitely doing it. In terms of professional and audit expenses, we are not looking to curtail any expenses there. In fact, I would be more than happy to increase the expenses, because we are looking to work in a more professional environment and in a more professionally managed organization, where we will definitely improve the quality wherever possible in all the areas, right? Then the link of the register is available on the website of CDSL, Abhishek. If that link is not working, you can directly go to the website of the company. A separate link is also available there. So this register from the inception till date has been hosted, both the register of contracts and arrangements and the register of directors and KMP. These both registers are available. You can see a single link for both these registers on the website of CDSL. Quarterly presentations, I think I have answered this, and the growth triggers also I have answered. Coming to Mr. Jechan on the reduction of expenditure, this is already covered with question number 3 of Abhishek. And with respect to dividend and bonus, definitely as far as the dividend is concerned, you can see that wherever in the operations of the last 10 years from 2015 to 2024, wherever the company has done profits, the company has always, the board of directors have always decided to declare dividends. In this 9 to 10 years, we have skipped dividends in about 3 years, where the company had losses or was just recovering from the losses. Otherwise, last year we had a 20% and this year we have a 25% dividend. So definitely this is something that we value for our shareholders, and we are definitely looking to have better dividend structures in place. But at the same time, you also have to look at the total outflow when compared to your capex plans and other working capital business plans that we have for the coming years. Bonus, I believe the board, I leave the bonus decision with the board of directors. They in their absolute wisdom will decide what would be the right and the appropriate time for a bonus issue. Then coming to Mr. Manish Sundaram, with respect to the planned visit, sir, so far a planned visit has not been organized. We will definitely have your point noted, and in case in future if a planned visit is organized at any of the location, we will have our beloved shareholders definitely intimated about it. And with respect to your request of hybrid AGM, that is also noted, sir. If possible, we will definitely have this next year. Then coming to Priyansh. Yes, Priyansh, with respect to your queries, you had only one query on the 4 proposed resolutions, which are with respect to revision in the remuneration of Mr. Sunil Kumar Bansal, Mr. Divakar Bansal, Mr. Harsh Bansal, and Mr. Amber Bansal. So, Priyansh, first of all, the salary scale that has been there on the resolution is the higher scale, right? That does not mean without the increase in the turnover or increase in the profitability, these remunerations will be paid. These remunerations are derived based on the outlook for the next 2 to 3 years, because the shareholders' approval cannot be taken year after year. So this is a remuneration which is scaled on the higher side, right? Let me tell you, the present remuneration of Mr. Sunil Kumar Bansal is 5.2 lakhs per month, right? And Mr. Amber Bansal is about 4.2 lakhs, and Mr. Harsh Bansal is about 2.75 lakhs. So this is not something that the board of directors or the nomination and remuneration committee would award the remuneration just because a resolution has been passed. A resolution of the shareholder is always passed looking at the growth factors for the next 2 to 3 years. The increase will definitely, and be rest assured, the increase will remuneration be definitely in line with the commensurate to the industry standards, the growth profitability in terms of both the top line, bottom line. Definitely there will not be the case that out of 100% of the profits, 42% of the profits are taken away in terms of the remuneration. That will never be the case, Priyansh. The nomination and remuneration committee, the board of directors, and the directors themselves will not take such a high remuneration when the company's turnover or profitability is at that scale. Let me also tell you, during the COVID period, the management team themselves decided not to increase the remuneration, right? So this is not something that is left just because the management is in control. They will decide any remuneration, whatever they deem fit. It is not like that. Okay. So this is a remuneration which is on the higher side. This is definitely not for this year, but for next year, future years, for the next 3 years. All the questions. So I believe I have answered to all the questions. In case if I have missed any of them, please pardon me. You can definitely write to me to our secretarial department, to my mail ID that is available on the website. I'll be more than happy to answer to any of your queries. Please pardon me if I have missed any of them. Yes, Harish sir, we can continue with the proceedings of the meeting. Harish sir, your voice is not audible. Please unmute yourself.
Yeah, is it clear now?
Yes, yes.
Yeah, I believe all the queries were answered to the satisfaction of the shareholders. Now let us move to e-voting. Members may note that